What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Today, my guest is Chief Investment Officer at Spotlight Asset Group, Shana Sissel. Big fan of Shana's. She hosts her own podcast. She's a regular on Fox Business News and puts out a ton of great commentary on Twitter. Topics discussed today were SPACs, got our thoughts on GME, alternative investments, gold and Bitcoin, women in finance, and why Shana's favorite part of the market right now is small caps, the Russell 2000. Futures Radio Show is sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. You can listen to Futures Radio Show podcast anywhere where podcasts are available. But if you want to watch Futures Radio Show podcast, you could do so on YouTube or on anthonycrudele.com. This show is also sponsored by Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-mini Russell 2000 futures symbol RTY and Micro E-mini Russell 2000 futures symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. Shana, thanks for coming on the show.
Pleasure to be here. Thanks for having me.
It's great to speak with you. You know, I've been following you on Twitter for some time, been watching your stuff on TV for quite a while. Really a fan of your work. I like the way you talk about finance, straight to the point. Like I said, there's only a few people I like that are on TV that I think really just talk to the people about finance, about trading, and you're one of them. And so I don't know a ton about your background, so I kind of wanted to start there. I mean, how did you get started?
Sure. So it's funny that you mentioned that, kind of talk to the people straight to the point. I actually listen to myself and think that I don't sound that smart sometimes, but I think that that's part of my appeal is that I don't talk in a lot of lingo and throw out a lot of stats because I just don't think that resonates with, larger audiences of various sophistication. And part of why I've gotten to where I am in my career is because I have the ability to explain really complicated and complex aspects of the markets and investing in a really simplified way, because that's just how my brain breaks everything down. Even though I get the much greater complexity of it, and I can talk to somebody who's super sophisticated as well. That's just how my brain thinks about it, and how I feel like I can add the most value and that just comes from where I grew up. So I grew up in a city called Worcester, Massachusetts. Very blue collar, very, salt of the earth kind of people. My mom's an immigrant. My grandparents, my dad's parents were immigrants. I did not get into finance on purpose. It was never in the cards for me. If my dad had had his way, I would have taken the teacher's exam, become a teacher, had a union, had benefits, had a pension, and been done with it. That's the route he wanted all his kids to go. He was a cop. My mom was a public school teacher in the inner city. And so I did not go the way of my siblings or my family. And oddly enough, when you come from that background and you decide to take a different path, it's often viewed like you forgot where you came from a little bit. But part of why I love what I do is because it wasn't something I was necessarily exposed to at an early age. And so it's been a learning experience from day one. And it hasn't been, the traditional career trajectory either. So I started in the business shortly after college in spring of 2001. I worked a little bit in the industry before then, but my first real job was in the spring of 2001 as a financial advisor with Morgan Stanley. And I just didn't want to be a financial advisor. I have great respect for those who are financial advisors. I think they do good work, but I just never had the stomach or the mentality to deal with individual investors, quote unquote, retail investors, because there's so much of a psychological aspect to it. And you really have to be a therapist more than anything.
It's so true.
that job is a heavy sales and psychology job.
Yeah.
Because there's a lot of selling involved, and then there's a lot of talking people off the ledge and trying to get people not to make emotional decisions with their finances, because finance is innately emotional. So but I did love the markets and I loved what I was doing, so I went back to school and I got my master's, my MBA from Bentley University, and took a job with Fidelity Investments on the sales desk, and then worked my way from the sales desk into more analytical roles. And over the years, I've worked for a number of well-known companies: Russell, Mercer, Ariel, Orion, doing manager due diligence, mostly in the hedge fund space, but I've covered everything on the equity side as well. I've a lot of what I've learned over the years has been trial by fire. I always joke that I got hired at Russell to be a junior quant analyst for their hedge fund team. And prior to that, I had worked at Fidelity, which is a long only fundamental shop. I had no quant experience. I knew nothing about hedge funds. As a matter of fact, when you work for a big long only firm, hedge funds are kind of seen as like the devil. Like, they're the evil side. They're because they're so different. And I got hired strictly because I knew how to use a specific software that's super hard to teach people to use. And they were far more interested. They felt like they could teach me about hedge funds, and they could teach me how to build a quant model, but they could not teach me anybody to use the software. It would take months, and the other stuff, it was a smart person would catch on to quickly enough. So I joined Russell in June or July of 2007. So just think about that, right? So I got into the hedge fund space a month before the August meltdown, the liquidity crisis. Yep. Oh, yeah. When we had that blip in mid-August where all the large cap, mostly value names, were getting crushed because people were getting margin called out of their like super illiquid positions. Yeah, well, the first week I was at Russell, we had a manager we couldn't liquidate that gated us. That was my first experience in the hedge fund world.
Unbelievable.
And so I was at like the epicenter of everything that was happening, and that was my first experience in that space. But it actually made me respect hedge funds so much more because it's like canary in the coal mine. And I did things at Russell that to this day have helped me in my career. So one of the big projects I worked on in the 7 months I was there was they wanted me to build a regression model, because we were getting gated from all these funds, where we could replicate the exposures using futures contracts, right? So I was building this regression model to try to figure out the best combination of futures contracts to use to hedge our exposure from the stuff we couldn't liquidate. And that ended up, if you think about it, being what hedge fund replication is. So when you look at all these ETFs and hedge fund products that came out in like 08 and 09, in 2010, like I was building in essence that. So I remember being at a conference and Andrew Lowe, who is the founder of Alpha Simplex, which is a hedge fund replication mutual fund complex, presented. And I remember I asked him a question about his adjusted R squared or something, because he had so many factors in his model. And he was like, I remember he just gave me a look and was like, who do you think you are? But I had been doing it. And then like a year later, you had all these firms starting up that were doing the same thing. And my career has been a lot of being in the right place at the right time, so that nobody had an edge in information that above me. So like, that's a perfect example. When I got into the industry, 529 legislation was brand spanking new. So I made 529s my like, I'm going to know everything about this, and that's going to be my area of expertise and my edge, because nobody else can know more than me, because we're all learning at the same time. And that's been at Orion. I built the direct indexing product, and again, direct indexing is now becoming a big thing, and I can speak of it. SPACs is another thing that I've been speaking about a lot, and that people ask me to speak about a lot, only because same thing. learning about a product and being in a situation where I had to learn about something similar. So nobody has an information edge on me. And so I've always looked for those opportunities, and that's kind of what got me to where I am today.
It's interesting how where we start and how much of an impact that really has on the trajectory of our career. Not always, but a lot of times. I mean, I started on the trading floor in 95 and really at the turn of when everything was going from pit to screen. And that's why I became a screen trader right away. And it's just like at that moment, if I joined maybe 5 years or start so many years earlier or later, it's just totally different. I don't get to see the pit, the transition, and it kind of molded me into who I am. And a lot of what happened with you is very similar. I was taking a bunch of notes, and I thought it was really interesting in how you found really edges in the industry that you just said, I'm going to focus on this, and that's where I'm going to take my next opportunity. I love that initiative to do something like that. And there's a bunch of stuff I want to talk about today. And like we said in the beginning, you're a straight shooter, so I'm interested in hearing about several things from you. Before we even go forward, too, I was looking at your shirt. Is that the old Patriot shirt?
Patriot, old school.
I was thinking about that. I'm like, she's got the old Tom Brady Patriots uniform. You got so if you guys are listening to this on audio, you got to go to YouTube to see it.
So fun fact, my paternal grandfather, my dad's dad, was an original Patriots season ticket holder in 1960. So my family had season tickets until he was incapacitated and had to go into a nursing home. That was in around 94, 95. He died in 95. So that was right around when Parcells came to coach. And that's when the Patriots franchise is when Kraft became the owner of the team. And that's when the Patriots, as they stand today, became like a thing. And I remember my dad and my uncles trying to figure out if they wanted to keep the season tickets, and then ultimately deciding, because of all the years at which the Patriots were horrible, like 35 years my grandfather had season tickets, that they weren't going to keep them. And now my dad's been on the waiting list for season tickets for the Patriots for like 8 years.
I was on the waiting list for the Bears for a decade.
Yeah, my dad has been on the Patriots waiting list forever, and sports is like a huge part of my life. Maybe I'm just a sucker for working in industries with a lot of alpha males, but my undergraduate degree is in sport management, and I specialized in media relations in sports. So I worked for the New England Sports Network. I worked for the Red Sox. I worked for a minor league hockey team prior to joining this industry, and I wanted to be a sideline reporter. Like my mentor and the woman that I really looked up to, who was super impactful in me, even today doing media, was Kara Henderson, who used to be with the NFL Network. And so I'm a huge sports fan. I'm a wealth of sports trivia. And as a kid, we'd have 2 TVs and 2 VCRs, and they would all be, you're at an age where you will remember this. Like back in the day, if you were recording something on the TV, you couldn't watch anything else, right? Yeah. And usually somebody was there to like pause so you could get the commercials out. There was no such thing as like DVRing and rewinding through. It didn't work that way. So I was captive. Like if I wanted to watch TV on the weekends, it had to be football or basketball or hockey or baseball. And my brother is like a psycho on sports statistics. He can talk, he's younger than me, but he could talk to somebody 20 years older than us and rip stats out on players he never got to see watch, because he used to read Street and Smith. Do you remember this? Like the Encyclopedia Street and Smith, like basketball encyclopedia that you get.
I remember having encyclopedias. I mean, right when we walked in our house, I remember, people went door to door and sold them.
These were like quarterly things that they did. The Street and Smith's basketball thing.
I don't remember
the NCAA, where they would have like every major college player and all their statistics. My brother used to sit in Walden Books on the floor when we were at the mall and read them. And then like my parents would feel pity on him and spend the $30 to buy it for him. And he would just memorize everything in it. And at like 10 years old, he used to have like 3-ring binders just full of statistics. He would just watch the games and write the statistics down. I still think he missed his calling. He would have been an awesome sports broadcaster. But
some people just have that memory for those sports stats. I know a couple friends that they know baseball stats, and I'm like, who even knows these old school baseball stats? But
yeah, one of my big family traditions is I didn't get to do it this year, but I fly my brother out to Chicago every fall, and we drive down to South Bend because he's a huge Notre Dame fan. And we go to a Notre Dame game, and that's like our brother sister bonding time. And every year we've done it, we've had the best time.
Yeah, I'm a big Notre Dame fan myself. It just, no matter how good that they appear to be, it seems like they can never really finish the job. But that's a whole other conversation.
Yeah.
There's a few things I want to talk about today with you. I mean, I wanted to get your thoughts on, GME, even though that topic is kind of, it's dwindled, but I think it's something that it changed the industry and in a lot of ways. I think I could really give a list of things that I think and how it changed the industry, but I want to pick your brain and see what do you think about what happened there?
So it's interesting because we talked about this earlier, but my ability to break things down and simplify things has always been, kind of my edge in life. And GME is a perfect example of that. I felt like I was being baited on my Facebook's feed for like the entire week that was happening, because my friends who have nothing to do with the industry would be like, I don't understand what's going on. Like, what's happening? Why is this such a big deal? So I ended up talking about it a lot. And one of my very good friends, Carrie Mantha, who used to work for Galleon Group, which is a hedge fund that you may have heard of that blew up in the financial crisis because the founder, Raj, was convicted of insider trading on their technology fund. She had nothing to do with that, but nonetheless. So in terms of GME, I think I have some unique perspective because I was always sort of jaded by it. And a lot of people cheered it as, the little guy sticking it to the big guy and just not understanding the overall dynamics of the market. To me, it was a situation where people who don't understand the broader market dynamics were trying to get involved in something and not really understanding the end game. And that was my biggest concern from the beginning was, in executing a short squeeze, the most important part of the plan is your exit strategy. And a lot of people weren't thinking about it that way. They were just thinking about how high can I ride this, not thinking about how do I get out of it. And it was always apparent to me that there were going to be like a handful of people who probably started the conversation that pushed it in order to develop their own exit strategy. But the vast majority of people I knew that were participating, and a lot of them knowing nothing, were going to get hurt. And they all were like, I don't care. Like, we're sticking it to the man. And if I lose all my money, that's fine. We'll ride it down. And I thought that was the saddest part of it, was that it became this kind of pact where, people were willing to like just throw money away and ride it down and lose money because they thought that somehow they were making a difference in the greater good. And having lived through the financial crisis and working with hedge funds, like hedge funds blow up literally every day. Like literally every day a hedge fund blows up. There's thousands of them. And the ones that everybody knows and has heard of, those guys never blow up for the most part, because they're really smart and they have diversified their risk, and they have these very complicated compliance departments, and there's typically not one guy running a fund. But there's been big blowups in the hedge fund world. One of the ones that sticks with me to this day is Everest Capital and the Swiss franc short.
Oh yeah.
Bet that they had that blew up that firm. That was a firm I had tremendous respect for, and I was working at Fidelity at the time, and we were working on hiring them as a sub-advisor when that all happened, and it was based on my recommendation, so it made me look really bad. But that happens. I mean, that's just the nature of the beast. So I never felt like this was some like vigilante justice quest of sticking it to the hedge funds, because I understand that space, and say what you will, and I have personal feelings about several people in that space, good and bad. And I can see why, anytime somebody has billions of dollars, I can see why people, kind of don't feel bad if they lose it. But those people, if there's plenty of books out there that will tell you that people who have that kind of money lose millions of dollars all the time, but that's why they're billionaires. because people who lose a lot are willing to take the risks to gain a lot. And that's part of the mentality in that space. And so I just thought it was a dangerous game, and that people didn't truly understand the complexities, and especially what it revealed, not so much about the investors themselves, but the platforms they were using. So Robinhood specifically, and how little people understand about like brokerage agreements and what you're signing up for, and how the regulatory function works. And that, it's not that Robinhood was, trying to keep their investors from making money, but there's regulatory framework. A lot of it comes from Dodd-Frank that came out of the financial crisis, that that impacts, how much, when a platform has a lot of trading in a specific name, and they're doing it all on margin, there's all sort of capital requirements and, settlement, and like things people don't think about that are like the plumbing of the system. And that everything that happened was actually a positive thing and should make you feel better about the markets, not worse, because all the safeguards worked in this case. And in many ways, the actions that people got so upset about probably saved people a lot of money.
And, I'm curious as to how you think it really happened, because I have a little bit of a different opinion on what I think ultimately happened here. I mean, look, it's hard for me, being a trader and seeing a bunch of retail traders come in and drive a short squeeze like this. In the back of my mind, I still continue to believe that. And I talked with this a little bit about with Jake Wujastik. He actually looked at the cheddar flows and said he doesn't think it was a squeeze by the little guys. I think that my thinking is another hedge fund or somebody else, it was utilizing the Wall Street bets type thing to get a lot of people going on that side, but they're not the main drivers. I mean, how many could these little retail traders accounts move up a stock? I mean, maybe I'm wrong, but I just feel like there was much bigger players behind the scene pushing this thing than not.
I agree 1,000%. Like, I think the Wall Street Bets was because it was so public, but it's an anonymous forum, right? It's totally anonymous. Anybody can go on there and say they're Joe Schmo. Like I live in my parents' basements and I have $1,000, right? Like I could go on there and say that and no one would be the wiser. Yeah. The sophistication of it. And then people have posted like the original post from like a year ago of somebody who broke down their entire fundamental analysis. Like that's a professional. That's a professional that did that. That's not,
they're utilizing social media now is ultimately what I see is to get their, to get that squeeze out. It's not the little guys doing this.
The markets move really, really, and the markets move really, really fast. I think the little guy, quote unquote little guy, I almost feel like it's almost insulting to say that. I know. But, for the purpose of this conversation, the smaller retail investor felt like that's the part of it that bothered me the most, was that I felt like there were bigger players behind the scenes playing on this social movement, this justice, like playing on forces that are really driving emotion and behavior and vast in the mass public to drive them to take an action that really only benefited the people doing it.
Exactly. I mean, and everyone's saying, like we won. I mean, I was watching people actually say that they're glad that they lost money. They didn't care because I'm just thinking to myself, you got to worry about your stuff. You're worried about, trying to prove a point with this. It baffles me that people think that way. But anyway,
it baffles me that they think that they made a point that they won.
Yeah.
Because they didn't.
Yeah.
The hedge fund Melvin Capital got injected with cash so they could stay solvent long enough to see it through. And they probably, I don't know for a fact one way or another, but they probably, now that GameStop is at $58, I'm sure they're fine now. They probably got the liquidity to cover the shorts and then go short again and follow it down. There's no doubt in my mind that in the end, it was all about, okay, let's just get us to the finish line, because we all knew a short squeeze requires an exit strategy. It has to happen. And once the shorts are covered, there's no point in staying long. And then people lost money.
Well, there's a bunch of other stuff I want to get to. We're going to pause here for 30 seconds. And when we come back, I want to talk about SPACs. You already mentioned them. I want to talk about alternative investments and women in finance. So hang tight, traders. We'll be back in 30 seconds.
Why did I add futures to my trading strategy? 24/7 access to diverse global markets, like wheat. Can you say growth opportunity? We should probably harvest that.
Get S&P 500 and NASDAQ 100 by the slice. Just 1/10 of the pie. Trade the tastiest index futures, micro E-mini options with TradeStation. Get a piece of the pie now.
Welcome back, traders. Shana is still with us. Shana, loving this conversation so far. There's a few things I want to talk about. You mentioned SPACs. It's like you see it on social media all the time now. I bet you most people don't even know what a SPAC is. And it kind of ties into you just being a straight talker and really teaching people really about finance. Explain to everybody what SPACs are and what your thoughts are about them.
So a SPAC stands for Special Purpose Acquisition Corporation, and I like to call them private equity for chickens, because in essence, they are kind of private equity-esque. What happens is a person, a company sponsors a SPAC and raises capital, and then decides after they've raised the capital, much like a private equity fund, how they're going to invest that capital. And in the case of a SPAC, they pick a company to help them, a private company, and they take it to the public markets because the SPAC is already listed. And it's a different way for companies to enter the public markets. I think they're interesting for a lot of reasons. I think it's important to know that most SPACs don't succeed. You know, we all hear about the really high profile ones like DraftKings, SoFi, 23andMe is coming out, Virgin Galactic was a SPAC. So there's plenty of SPACs that have been successful. You learn about them after, of course, they become whatever company they take on and take public. What I think is interesting about the SPAC market is it's transforming the IPO process. So one of the big things that came and was part of the discussion when DoorDash in particular went public, if you remember how long it took them to finally get the price for the market. That day I was in Florida and I remember watching the proceedings, and I think it ended up being priced at like 3 times what the original IPO price was. And it didn't actually start trading until like 1 or 2 o'clock in the afternoon because it took so long to pair the bids and the asks. So what happens is, you know, traditionally the IPO process, an investment bank helps underwrite the process. And what they do is they sell shares ahead of the stock going public to folks who express interest. It's called like the interest period. Like when I worked at Morgan Stanley, JetBlue went public, and I had a couple clients that wanted to see if they could get a few shares in the IPO. And so I put in a request saying that these clients had expressed interest in getting some shares of JetBlue. And Morgan Stanley was one of the underwriters, and I think each client got like 3 shares, which is nice. But they were clients of the firm. They had to express interest. Not everybody got it. It was based on a variety of different factors. Institutions, large institutions. I remember when I worked at Fidelity, Will Danoff got in on the Google IPO, or now Alphabet. And he talked about how like nobody really went on that roadshow on the institutional side. But big institutions will get the shares, and they'll get it at whatever the IPO price is that is established by the investment bank before it hits the market. And in most cases, these big, well-known IPOs, they get a price of what the investment banking team that's underwriting the IPO thinks it's worth, per se. So like $60. I'm trying to remember what DoorDash was. I think it was like $60. It might have been a little less than that. So those people get the shares before it starts trading at that price. And then once it starts trading, you know, they get to experience all that upside. The problem is that it's not a really democratic process. Like not everybody can access the IPO shares, right? You have to be a client of the bank, at the investment bank that's involved in the underwriting, and you got to put in interest, and you have no control over how many shares you can get. Doesn't matter how much you can pay for them, whatever. And a SPAC, anybody can do it, right? Like you can just go buy the SPAC. So and so, like I think it was Richard Branson's company is the SPAC that is taking 23andMe public, right? So like you know that, so you can go buy it. You or I can go buy a couple shares tomorrow, and we get to participate in that IPO process, right? And I don't have to worry about, am I a client of the underwriting bank? So it actually democratizes the IPO process, making it accessible to anyone. Problem is, it also takes a lot of the arbitrage opportunity out, right? Because part of the arbitrage opportunity when you got the traditional IPO is the pop in the market immediately after it goes, because there's a frenzy of people who are trying to gain access to the limited shares. When you know ahead of time and it's already public, you don't have that pop. There's no arbitrage opportunity there where you can get these huge gains. It's still as much trial and error in terms of picking a SPAC. The best opportunities are picking a SPAC before you know what the targeted company is, because that is where you get the pop that is similar to a traditional IPO. Problem is, there's so many SPACs and so many of them are awful, that more times than
It's
not,
like cryptos. Maybe not these days, but
crypto is the I like to call it the third rail of Twitter. Yeah, I'm careful what I say about the crypto markets for that reason. But
yeah, I know these days you could just, you could buy, what is it? Is it Dogecoin? I don't even know how to say some of these things.
It is Dogecoin.
Okay.
I think it's Dogecoin.
I know it's Doge, right? How do people go and buy a SPAC? 23andMe, use that example. Tell everybody how they would go and do that. They just do it through their brokerage account? Do they have to go somewhere?
Yeah, it's like they would buy any stock. It's like, it's not like crypto where you have to have a special account. A SPAC's already trading on an exchange. You can just, as long as you know the ticker, you can just trade it like any other stock. It's not even complicated.
Super simple. Well, as we said from the beginning, we like that. We want to teach people how to become better traders, better investors. And I want to talk about alternative investments. You know, watching a lot of the content you put out, and I think these days it's funny. I mean, all my friends that have all their investments, some of the guys I play golf with, a little older than I am, and they're all looking for alternative investments. And it's always like, okay, well, it's such a broad topic now. It's almost like alternative investments are becoming almost mainstream investments in a lot of ways. You know, I mean, so before it used to be, what is Bitcoin? Now it's how much do I allocate to it? Because I would consider, crypto probably alternative investment.
An alternative.
Yeah. Right? Yeah. So talk to us about how you look at the alternative investment space and tell some of the things that you're looking at.
So alternative investments for me are, without getting into too technical, alternative beta. So things that don't correlate well with traditional equities or fixed income, even though they may actually invest in equities and fixed income. So like equity market neutral. Equity market neutral is a perfect example. Anybody who's seen me on TV knows I've talked about in the past an ETF, and the ticker symbol is BTAL, BTAL. That is the AGFIQ US Market Neutral Anti-Beta Fund. Full disclosure, I've owned it, and myself, my firm has owned it, and firms that I worked for before have owned it on my recommendation. At the moment, we do not own it, and I do not own it anymore. So full disclosure. But BTAL is an example of an alternative investment. Like, it is equity, it's market neutral. So they're going long and short. In this case, they're going long stocks with low beta and short stocks with high beta, an equal measure. So their net, their goal is to be net long zero. So perfectly hedged. Yeah. And so then they make all their money on the spread. But that means it's not, even though it's investing in equities, it's actually not correlated to equities at all. And those are the types of things that help with risk management. And I learned this so much because I got involved in hedge funds during the financial crisis. I'm telling you, that was for me the most life-changing experiences, working for a hedge fund and being involved in hedge funds in a crisis, a financial crisis, because they are the canary in the coal mine. You learn so much, but you also learn how important they are in terms of risk management. And everybody thinks they're super risky and they take all sorts of risk, and that's true. But they're doing things, it's in the name, it's hedge fund. They're attempting to do things and take upon strategies and investment processes that can't be done in traditional ways. So I just think they're really important. And now they're really accessible to anybody. Like anybody can go buy BTAL. We use a mutual fund right now called Chiron Capital Allocation CCAPX, which is essentially a 40 Act global macro fund. And so from a risk management perspective, I think it's really important for people to consider, even somebody who's doing, day trading, if they want to have just a hedge in the portfolio in case they get something really, really wrong. These are great ways to do that without having to be super knowledgeable about complex option strategies or the like. And a lot of people talk about, like, if you want a hedge, why don't you just buy a put? Well, you could do that. But if you want to have a broader hedge on the market or a specific type of hedge, and you don't want to have to worry about expiration dates and managing that position, oftentimes using an ETF that takes a hedge strategy can be a better way to do that.
And that one you mentioned was CCAPX?
Yep.
Okay.
Yes. That was run by Ryan Caldwell, who is famous because he used to run the Ivy Global Strategy Fund, which is often considered the source of the fat finger trade in 2010.
Interesting. What parts of the markets do you like right now? Because let's face it, I mean, I got to tell you, I hate comparing times, right?
Mm-hmm.
I mean, I've been in this industry for quite a while, and I don't think any market is ever, I mean, they're always a little bit similar, right? You're going up, it's similar to the time we went up. You're going down, it's similar to the time we went down. But what I'm noticing is just really the amount of money, so many people that I know that are just making it on just parts of the market, or just that you just, they're buying penny stocks and they're making money. It doesn't matter what they're buying. Almost they're making money.
Mm-hmm.
They're buying crypto. They're making money. For me, I've been trying to buy gold. I'm not making money on that, but that's another story. But I mean, so what do you like about where we are right now? We're at all-time highs again. It seems, Bitcoin's all-time highs. I mean, really, I don't know what's not going up at the moment right now, but what parts do you like from here going forward?
So I talk about this a lot. A lot of people like to make the analogy that this is like 99 or the tech bubble 2000. And I didn't live, that's when I got started in the industry. So I've done like historical research, and I do think it's different because earnings are driving a lot of this. And, 99, most of the companies that were going up had no earnings. And that's not the case today. And so you can always talk about valuation of the market is only as valuable. And I say this so often, I feel like a broken record. Determining the value of the market, if it's overvalued or undervalued, is only as good as your E in the PE. And if your E is wrong, it doesn't really matter because the valuation that you're looking at is wrong. And E's been wrong. Like, I think it's 20 analyst estimates have been off by an average of 20% to the average earnings surprise has been 20%. That's large. But right now I like small caps. There were some technical things that really happened in October that favored small caps. And small caps as a whole have not done well, but if you look back historically, mid cap and small cap stocks over history outperform in the long term, even though they're more volatile. And small caps had gone through a period of significant underperformance. Now that's different than micro cap. Micro cap, which is more of those penny stocks we were talking about, that's a little more, those are far more easy to manipulate. And those could very much be like another GameStop scenario where a big guy's going in there. Those are those pump and dump stocks because it's so easy to manipulate them. Not that micro cap stocks can't be really interesting, because they are. And I'm just pulling up these stats because I have them written down. But the reason I've been talking about small caps is because back in October, Strategas, which is a independent research group that I am very fond of. Jason Trent and I became friendly in 2008, 2009, 2010. And he's the founder of Strategas, and they put out some really, really good research. They did a paper in November just pointing out that in October, small cap stocks had Russell 2000 had reached a historic level of non-earners. 47.6% of the stocks in the Russell 2000 were not a positive sign. I know it sounds weird, but when there's a high amount of stocks in the Russell 2000 that fall into that non-earners buckets, it's usually a signal of a period of outperformance is coming. There were 3 other times in history that small caps had non-earners in the Russell 2000 at that level. It was 1991, 2002, and 2009. Those are 3 periods in which over the next 3 to 5 years, you saw small caps outperform. And then paired with that, another technical signal that there was rising momentum and positive earning revisions in the Russell 2000. It was the highest it had been in 20 years. It's approximately 70% of companies in the Russell 2000 had positive earnings revisions. So that those 2 things had typically signaled outperformance, and every other time it had happened for the next 1, 3, and 5 years for small caps. So that happened in October. And if history tells us, and those technical signals hold true this time, it means that we're only at the beginning of small caps outperforming as a whole. So, that's one place that I really like. And even though it's controversial and people troll me on it all the time, I'm still a big believer that technology is going to be, I know, technology is going to be a long-term winner. Even the names that have been working, although I've been trying to find opportunities outside of the 10 names everybody talks about: Apple, Amazon, Netflix. And it's like Marvell Technologies is a company that I really like. That's a play on 5G. Because I think long-term trends, even after the pandemic, still favor technology. I think Zoom will still be a thing. I think working from home, and we've seen this large company saying that more and more they're going to allow employees to work from home more. I think all of those things are positive for tech long-term. And if you have like infrastructure build-outs, they're going to be tech heavy because, whether it be putting down fiber optics or like building 5G towers, making mass direction of internet accessibility. If there's one thing we've learned through the pandemic, that's a real problem. Neighborhoods here in Chicago on the south side have very limited access to Wi-Fi. So remote learning is really difficult. And those are the neighborhoods that, probably need those things. So those types of things all favor technology, and we're becoming more and more dependent on technology. So I am a believer that technology will continue to outperform. So those are my 2 things.
Yeah. And, going back to that, what happened in October in the Russell, that's so interesting because I remember November in the Russell. It was actually the November to remember. And they had actually, the FTSE Russell put a post out about that. It was up 18%. And I remember that that move, you just can't forget it. And really since then, the Russell has not looked back. And I find that to be so interesting that you recognize that in October, and then November is the biggest. I think it's the biggest month they had on record. I'm not 100% sure, but I think it was, right?
And last week, the Russell 2000 was up 7.5% just last week.
I know.
Yeah,
as a futures trader who
hard.
looks at the Russell a lot, I tell traders all the time, I'm like, you guys have to be pulling this product up. It's a leader right now, and so hearing you say that really confirmed a lot of. I didn't know the things that you knew. That's why I talk to people like you to learn that. And just real quick, explain once again, because I think that stat is so important, because I remember what happened in November. For you to recognize something like that in October, just real quick, what was that stat
I didn't
again?
recognize. I'm not going to take credit for it. I read a piece by Strategas who pointed it out. But the stat again was that in the Russell 2000, it had hit a historic level of companies that had no earnings. So 47.6% of the companies in the Russell 2000 in October did not have any earnings.
And that's
I know it sounds counterintuitive.
It sounds so
counterintuitive. When that happened,
blood in the water.
Yep. But when that happens, it's counterintuitive. When that happens, it tends to signal uh, uh, the start of a period of outperformance. So the three other times it happened was 91, 2002, and 2009. If you look at what small caps did in those years, when that stat, when those historic numbers were hit, you'll see that small caps went on to outperform for the next 1, 3, and 5 years. The second thing that also happened in October that was also signaling the bottom for small caps was that 70% of the companies in the Russell 2000 revised earnings up for the next couple quarters. So you had peak non-earners, but you also had 70% of the companies revising up. So think about that. That's a bottom, right? That has to be a bottom. It's like those two signals together. That's a bottom.
Put that in your journal, folks, because when you see something like that again, because let's face it, it will happen again. It's just the way it is. That is an opportunity. I like things like that. I actually keep a note book of things like that because to me, that is the proof was there. We saw it. I mean, and I just like that way of thinking because even though I'm a futures trader, I'm obviously also an investor as well. And I think, a big part of what I wanted to talk with you today is really helping the futures traders that listen to this become better investors. And really, I think also they're two totally different things, trading and investing. But when I understand the things that you're talking about today, and like I was taking notes in the areas that you like, it helps us understand leadership in the market. If you're day trading the Russell like I am or swing trading it, you understand that you probably want to be more heavy one side than the other. And these types of stats are important because if they support your technicals, now you have something. You have things in the macro that are coming to play with things in the technicals. And even if we're shorter term traders, these things can be very beneficial. One more topic.
I mean, if you had taken that signal in November, to your point, and just followed it a month, you would have made a ton of money.
Yeah, even if you just weren't short. I mean, I think it's also look at it as you don't have to always. I don't look at everything always as an opportunity to make money. Sometimes it's just an opportunity not to lose money, right? I mean, if the Russell was just getting beaten up, and I remember at the time there were so many people I knew that just kept saying the Russell is done, keep shorting it, and I'm thinking to myself, and I actually was very vocal about this. I was long Russell for a long period of time. It's just funny, and one of the biggest moves I wasn't in it. That's part of trading, though. I ended up getting out.
It's also the same time you heard everybody saying that value will never do well again.
Yeah, I mean, so it's
value is dead. It's dead. It's been years. It's never coming back. What happened? Boom. Value is crushed growth ever since.
If we've learned anything, it's right. It's like when there is blood in the water, when everyone says something is dead. How many times does it have to be proven to us? It's a time to get in.
It may not be immediate, but it's usually a sign that you've probably gotten pretty close to a bottom.
Exactly. That you've gotten, I'm all kind of waiting for that in gold. I had one other topic I want to get to, and we'll get to it. But, I talk about gold a lot. And the reason I do is because, first of all, the people that I respect the most in the macro world, I'm not a macro guy, but they all say gold, right? And I'm a futures trader, and I like to trade gold. I only been trading it to the long side, but the thing is it just does not perform at all right now in times where you think it should be. Do you have any thoughts on gold?
Mm-hmm. So I think of gold in terms of inflation, right? And so if your concern is inflation, and that's a lot of people's concern, right? Because the Fed has put so much money, so much support into the markets, that logically that should lead to inflation. It just should. But what I think people miss is that when the economy became a global economy, it became extremely difficult for monetary policy and central banks to influence inflation through reflation. Because they, especially in the United States, right? So gold is priced typically just like oil in US dollars, right? Because the USD is the standard currency of which everything is, attached to, pegged to. What other currencies and other central banks are doing matters. Like we can reflate till we're blue in the face, but if the European Union keeps rates at like negative whatever, like we're never going to have inflation. It's just not going to happen because our USD will still have, be stronger than the euro. That's just it. It's not going to get weaker if other places are trying to weaken their currency and they're pegged to us. So gold is to me really an inflation play. You have to have the real risk of inflation. And I just think that the dynamics that typically drive inflation aren't the same as they've been in the past because of the globalization of the economy, which is that is a last 2 decades development. So that's a massive change in the structural aspects of how inflation happens that never existed on the face of the financial markets before.
And my thought is gold, and I learned this from one of my mentors, Ira Harris, gold is a hedge against central banks, but that has now become Bitcoin. I mean, Bitcoin has taken that role.
Right.
I mean, so the inflation side of things, I agree with you. I understand that aspect of it. But the hedge against central banks, I mean, do you feel that gold has just lost its way with that? Do you think it will come back? Or is it for you, it's just the inflation like you mentioned?
Well, I think that in the past, central banks influenced inflation, right? Like that's what their job was. So that's one and the same, right? A hedge against central banks is almost a hedge against inflation. Because central banks largely exist in an effort to control inflation.
So then why Bitcoin go up the way it is, right? I mean, think about that. Is there multiple reasons? I mean, I know that there's other reasons for Bitcoin, but I think a big part of it is the fear of what central banks are doing is driving up Bitcoin.
I don't think that that's it at all. I think there is value to the blockchain. You can pick your horse on which one of the cryptocurrencies have the blockchain that's most likely to be adopted. People like to make the analogy, and I think it's a good one. There's a couple, but when you looked at like when the combustion engine and cars came to be, right? There were hundreds of car companies, and that became like 7, right? Like 7, actually 7 probably now, but like then it was like Ford. And then you had, Chevy come into play or whatever. But there's eventually a winner. Whenever you see this new disruptive industry come to be, and crypto isn't so much the disruption as much as the blockchain is. And each cryptocurrency has its own unique technology that makes their blockchain unique. And so ultimately you're making a bet on which blockchain will be the blockchain that wins, and will be the most heavily adopted by, the masses. So it's not the currency, it's the blockchain. Bitcoin's been around the longest, and people would argue it has the best blockchain. Technologically speaking, and from an institutional standpoint, others will argue Ethereum does. In the end, it's a scarcity and it's a speculative price discovery period that's going on here that's driving Bitcoin and Ethereum and other cryptocurrencies, which is really normal when you're in what is essentially an infancy period for a brand new asset class. So it's not as simple as saying it's a play on inflation. You're talking about literally something that never existed before existing, and there's a scarcity of it because there's limited supply, right? And so it's a price discovery where people are trying to figure out what's going to win. And then the other example people say, more simplified, is if you think about, and it's funny because neither technology exists anymore, but like the VCR, is it beta or what was it? Beta, or what was the other one?
It's just VHS, right?
Yeah, or that's it, VHS. Yeah. Beta or VHS, you had to make a bet on which one would get mass adoption. And my dad bet on beta. We had a beta VCR for most of my life. And I remember going to the video store and there was like a little section.
You couldn't get anything.
There's like a little section. These are all the movies we have in beta. And like the whole store was VHS and like this little corner was where we had beta. But yeah, I mean, it's a similar thing. And so it's really hard to say what's driving Bitcoin. Tesla obviously buying huge amounts of it. But that's going to happen, right? Because in order for Bitcoin to be used for payment of anything without having to be converted to a fiat requires that the person that you're making the payment to basically has a stock of that currency. So for Tesla to accept Bitcoin as a form of payment for their cars, they need to have basically a bank of Bitcoin in which to complete the transaction. So, that's what's driving a lot of it. And
I agree with all of those things. I go back to comparing like the hedge against central banks, and to me it's the store of value play. I mean, the inflation aspect, I completely understand that. I'm saying that in this scenario like this, I think we're going to get inflation, but I also, it may take some time, but I think just from the store of value aspect, putting some money into gold in this environment, I look at it and say to myself, if gold can't go up in this environment, it's hard for it to go up at all, is kind of what I'm saying, looking at it from that perspective, because there's so many things I see that there's reasons to at least speculate's what we do. Right, Shana? So I look at it and go, I understand the Bitcoin thing, but I think that, I know a lot of people now that are actually storing they're using it as a store of value. They're not looking at it from the technology side, and they're choosing that over gold. And to me, it's one of those things.
This is my whole argument for gold. Not that I'm suggesting I'm not big into playing gold at all. I've seen people do it. It's not my thing. But if I'm going to make an argument for gold, if the world like blew up tomorrow, like Bitcoin is like a figment of our imagination. It's not a physical Bitcoin, right? It's like all like, it's all like I don't want to say it's made up because it's not, but it's like
if you don't have an internet connection, what are you going to do with it?
Right. But if you have gold bars in your basement, you can do something with that.
Exactly. And that's why I say, like, I look at this time and I see everything going up the way it is, and I go back to silver, gold. I do think inflation will come, and I just think on the speculative side of things as a store of value, we could do a whole show on this, so I'm not going to spend too much more time on it because I do want to get to women in finance. I think that this is a big thing. I started on the trading floor, and I think I said to you in a different time, I said if there was 5,000 people on the floor, maybe there was 500 women. Probably not even that many.
Not even that. It's like 50.
Probably was like 50. And when you go through the years now since I've left there, and the more and more women that I've gotten to know in this industry are really some of the best people in the industry. And I think more and more women should be getting involved in the financial industry and community. You do a great job in delivering, as I said from the beginning, straight shooter. You truly do educate people on getting better in finance. What are your thoughts on the current climate with women in finance?
I think I have a couple opinions here. I think women are really good investors, and I think seeing people like Cathie Wood out there and being lauded for being really smart and seeing women succeed is a helpful thing. I think, we spend a lot of time complaining about the industry and, why women haven't done well or all the things women have to deal with in the industry. But I have to be honest with you, that exists everywhere. Sexism, the patriarchy exists everywhere. Like, it doesn't matter if you're in finance or you're in a highly competitive environment with really smart people and it's mostly male. You have ego and you have testosterone, and it's just life. So I don't consider these things unique, but I do think you need to go in eyes wide open. I think for me, the best way to encourage women to get into the field is not to focus on all that, but rather to spotlight and highlight women in the industry doing a good job and what opportunities are there. So, one of my former bosses used to say, if you see it, you can be it. And so the more we can put women out there to be the public face, the better it is. And I don't consider what I do like some huge like project of me wanting to like inspire women, although, that's part of why I put myself out there. I like being on TV. I was the kid who wanted to be the lead in the school play when I was like 5. I like getting my picture taken. Like, I like that. Like, I like the spotlight, and I've, no pun intended. But I've always been that person since I was a child. So I'm super comfortable on TV, and I like doing TV. So I'm not going to sit here and tell you I have like some like selfless reason why I go out and do that. But part of my motivation, because I have this platform, is that I can be a really visible person that other young women can look at and say, oh, hey, look what she's doing. And the more we can put women out there and show other women that it's possible, the better, rather than complaining about how we need to go out and recruit women and complaining how the industry has to change. If we highlight and lift up women, and put them out there and show how smart they are and the opportunities, I think we'll be much more successful. And I think the industry is starting to shift that way, because I think more and more women are willing to put themselves out there, whereas maybe that hadn't been the case in the past. And I get emails all the time from people who are like, hey, I'm a dad, I have a daughter, and now that we're all work from home, my daughter works, does her school, and you are on TV. And because I don't look stiff, and I'm super girly, like I'm not wearing any makeup and I don't have my hair done now, but when I'm on TV, I have full face makeup on, my hair is all done, I have on super trendy clothing, and I play up the feminine aspect of what I look like, but then I talk and I can stand up with anybody. And so little girls see me and say that they don't have to sacrifice being a girl and enjoying girly things to be successful and to compete in the industry. And I do get a lot of messages from people saying that like their 10-year-old saw me and now she wants to get into finance because they saw me on TV, and I appeal to them because, they looked at me as, somebody that they want to be like. And it wasn't necessarily anything I said, but the way I said it and the way that I look, that appealed. And that is the key, in my opinion, to really accelerating this trend of women being in the industry.
I love it. I mean, I love what you always have to say. I listen to you. I learn from you. I think you are an inspiration to women. And, I go back to my days, a lot of my mentors were people that I didn't know, and I just watched in the way that they operated and the way that they went about their business. And to me, it gave me the vision of who I wanted to be. So I think what you're doing is inspiring other women who see it, and the way you conduct yourself and the way you speak. I think it's excellent. So I'm glad we got to talk about that. And we're done with everything except rapid fire.
Uh-oh.
So are you ready for the rapid fire segment? All right. All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform. Now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tryttnow.com. Shana, first question for you. What investor has influenced your career the most and why?
So my mentor is a gentleman by the name of Tom Allen. He became my mentor before I even got into like the analytical side of the business. He became my mentor in 2005. He's a portfolio manager at Fidelity Investments. He runs the Fidelity Midcap 2 fund. And he's just, for me, he's been the biggest influence on who I am, my career, what I've become, is like 30% me and like 70% Tom being a tremendous guide from the beginning. I would not be where I am today without him.
What was one of the hardest things for you to overcome in investing?
Trusting my gut, trusting my own work, especially early on, and trusting my own judgment. I can't tell you how many times I look back and think if I had bought that stock when I did all the work and I knew it was a good buy, I was too nervous to pull the trigger, or vice versa. I would have saved myself a lot of money if like my instinct that I should probably sell right now. And I wasn't always second guessing myself.
How has your process evolved over the years?
I just say it's all about learning, right? So for me, it's been reading and learning about history and applying the historical things that I've learned over the years, and seeing trends in the market. And more importantly, just understanding that human behavior is such a huge part of everything. And it's why we see the same things happen over and over again, because it's utterly predictable.
What is one attribute that you believe every investor should have?
To be able to trade without emotion. Emotional investing and trading is never a good idea. And so the more you can remove emotion from everything that you're doing and use logic as much as possible. I mean, you should always go with your gut if you really have a strong gut instinct. But at the end of the day, removing emotion is the number one attribute to being successful in this business.
Favorite book about investing?
So I don't have a favorite book about investing, but I have a favorite book that really helped shape my investing strategy and just how I approach the markets. And that is a book called Risk, the Science and Politics of Fear. And then the US, that's the international version, which I think is the better version. And if you look at my bookcase, I have like 10 copies of it. But the US version was sold under the name The Science of Fears by Dan Gardner. And it's all about how we read and how information is presented to us to elicit an emotional response, and how to be able to like train your brain to see it and to overcome that, to make better decisions.
If you had to pick a profession other than investing, what would it be?
Well, we talked about this earlier. I would be in sports broadcasting.
What's the best piece of advice that you received about investing?
I don't know if I really have the best piece of advice, except whenever everybody is in agreement, that's usually a good time to be contrarian. Or to question the masses.
Yeah, we talked about that a little bit today too.
Yep.
If you can give a piece of advice to the younger you about investing, what would you say?
I don't know what I would say, because the younger me didn't know anything, like didn't know this world existed. So maybe if you want to talk about like 22-year-old Shana, I would say to trust that you will end up where you're supposed to be, and just read and learn as much as you can through the process, and don't worry about how the path is going. But anything younger than that, I literally did not know this world existed.
Last question for today, Shana. Favorite thing to do when you're not watching the markets?
I wish I had a good answer to this. My son has got me addicted to video games. We play Sonic the Hedgehog all the time.
Which video games? I just had my
enjoy
nephews.
reading.
I just had my nephew in town for a week, and he was staying with me. I mean, they have these. There's so many games. I can't even keep up with it. What games are you playing?
My son is obsessed. My son is obsessed with Sonic Dash, which he downloaded on his Amazon Fire, which is the only tablet I let him have, because I can control so much of the content on there. So Sonic Dash is his new favorite thing. And when I was a kid, I was obsessed with Sonic. And so we actually he comes home from school and he literally will be like, Mom, I want to see you play Sonic Dash. And he'll just watch me play, and then I'll just watch him play. And it's so interesting. He's so good at it. He's only 5. It's so interesting to see how much he's learned. They say video games are bad, but I don't feel like there's anything real negative about Sonic. And it's really, his ability to concentrate, his hand-eye coordination, and to like just, make good decisions on the spot. I feel like that's a positive thing. So yeah, that, and I like, right now I can't do it, but I love traveling. So
I miss traveling so much, Shana.
I can't even begin to tell you. I was supposed to go to Vegas at the end of March, but now I would probably only go for a day. I was supposed to go with a friend, and we were supposed to be there, but then something came up. So and now I have to go for a work thing, but instead of being there for 5 days, it will probably only be a day, and I'm sad about it because I was really looking forward to like getting out and traveling and doing stuff.
I mean, I can't wait to get back to traveling.
Yeah.
It's the thing I miss the most about all this, but it is what it is, Shana. So, well, all I could say is it was really so much fun speaking with you today. I learned a lot from following you over the years, reading your content. It was great to hear from you today. Where can people learn more about you? Tell everybody where they could find you on Twitter and maybe a website.
Yeah, so I don't have a website, but on Twitter, my handle is Shana, SHANA, S621. That's where you can find me there. I also have an Instagram account if anybody wants to follow me there. It's just finance_queen 2020.
Cool. I didn't know you were on Instagram. I'll check it out there as well. Everybody, you got to follow her on Twitter. Shana, thank you so much for joining me on Futures Radio Show today.
My pleasure.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.